estate broker pre-licensing for the following units. Today we're going to go over broker management clinic number 2, which deals with policies and decision making for brokers and agents. Um, so let's go into broker management clinic number 2, policies and decision making for brokers and agents. Welcome. We're going to provide discussion on how to develop and establish policies for managing a real estate company. This course is the second of 3 broker management clinics that designated, delegated, and self-employed brokers are required to take every 2 years. New broker agents are also required to attend this class prior to license activation. This course fulfills 3 of the required 9 hours of broker management clinics that are required. Please select the next arrow to continue. So this has 5 modules: employee versus independent contractor agreements and policy manual, advertising, agency and commissions, licensee activities, teams and assistants, earnest money, property management, and transaction management. All right, so let's get started tracking your progress. All right, let's get started. Module 1, employee versus independent contractor. So why 3 broker management clinics? According to Commissioner's Rule R4-20-1103, it requires employing brokers, which we call as the company, and designated brokers, a DB, which is the person, the employing broker, which we call the company, to exercise reasonable supervision and control over the activities of brokers, salespersons, and others in the employment of the broker. So in 2013, ARS 32-2130A came into effect. It requires certain brokers to complete 30 hours of continuing education instead of 24 required for other licensees in order to renew their license. The additional 6 hours must be taken as 2 additional broker management clinics. 1 broker management clinic was previously required, so certain brokers must now complete 3 3-hour broker management clinics. So the following brokers are required to complete 3 3-hour broker management clinics: designated self-employed brokers with each license renewal, so that's me. Associate brokers with delegated authority. So if you're going to be a broker and you're going to review initial contracts, you have to do it within 10 business days. You need 3 3-hour broker management clinics to perform designated broker functions, such as reviewing and initialing contracts or hiring or severing licensees with each license renewal. All newly licensed brokers. So if you're going to be a new licensed broker the very first time, you have to take the 9 hours. So all brokers must complete 3 broker management clinics to renew their license every 2 years. This is false. So it just depends on what you're doing. It's not all brokers. New brokers, yes, but if you're an associate broker and you don't have authority, then you don't need to take 9 hours, the 3-hour course. The broker management clinics are designated as BMC 1, 2, 3. The general scope of each is listed below. So broker management clinic 1 is foundations of broker management, an overview of the many laws, commissioner's rules, and substantive policy statements issued by ADRE. Broker management clinic number 2 is broker policies, right? A discussion of how to develop and establish policies for managing a real estate company. Broker management clinic number 3 is supervision. A discussion of many of the major supervision issues a real estate company faces and suggestions on how to effectively supervise licensees. So In For Commissioner's Rule R4-28-1103, in part, this rule from the Commissioner Rule states a designated broker shall exercise reasonable supervision and control over the activities of brokers, salespersons, and others in the employment of the broker. So the designated broker, the DB, that's the person. You can have a lot of brokers under you. Um, you just need to have reasonable supervision. Reasonable supervision and control includes what does it include? Establishment and enforcement of written policies, procedures, and systems. So, what is reasonable supervision? Well, doesn't mean that the broker must micromanage every licensee 24/7, 365. No, that's literally impossible, right? So, but it does mean that the broker must have written policies in place and educate licensees as to what those policies mean and how licensees may adhere to them. So, first job. So, most of us remember our first real job. Mine was soda clerk. Um, in Brooklyn, and when I got my first paycheck, I was surprised by how little the take home pay was. That's because I was an employee and the boss had to withhold money for taxes and for Social Security and for Medicare. Employee and independent contractor. In most real estate companies, licensees are not treated as employees but as independent contractors. Independent contractors do not have taxes withheld, nor nor does the employer withhold for Social Security or Medicare. So if you're an independent contractor, when it comes to tax time, you're gonna have to pay heavier taxes because you got the full check, right? You didn't. They didn't. Your broker's not gonna withhold Social Security, Medicare, or taxes. So how's a person's status as employee or independent contractor determined? Well, IRS, according to the IRS, under common law rules, anyone who performs services for you is your employee if you can control what will be done and how it will be done. So, if I want this to be done and how it's going to be done, that's an employee. This is so even when you give the employee freedom of action. So, what matters is what you have the right to control the details of how the services are performed. Right? So IRS cites this example. Donna Lee is a salesperson employed on a full-time basis by Bob Blue, an auto dealer. She works 6 days a week and is on duty in Bob's showroom on certain assigned days and times. She appraises trade-ins, but her appraisals are subject to the sales manager's approval. Lists of prospective customers belong to the dealer. So she has to develop leads and report results to the sales manager. Because of her experience, she requires only minimal assistance in closing and financing sales and in other phases of her work. She is paid a commission and is eligible for prizes and bonuses offered by Bob. Bob also pays the cost of health insurance and group term life insurance for Donna. Donna is an employee of Bob Blue. In the 1970s, real estate licensees were granted a special status by the IRS and may be considered to be independent contractors, or as the IRS calls them, statutory granted a special status by the IRS and may be considered to be independent contractors, or as the IRS calls them, Statutory non employees. So if you're an independent contractor, the IRS looks at you as a statutory non employee. So there's three categories of statutory non employees, and they're called direct sellers, licensed real estate agents, and certain companion sitters. So, direct sellers and licensed real estate agents are treated as self employed for all federal tax purposes, including income and employment taxes. If if you meet the following. So, statutory non employee are substantially all payments for their services as direct sellers or real estate agents are directly related to sales or other output rather than to the number of hours worked. So it's based on your services rendered versus like working an 8-hour job. So, and their services are performed under a written contract providing that they will not be treated as employees for federal tax purposes. A licensed real estate agent may be considered to be a statutory non employee by the IRS if most of their work is directly related to sales or other output. This is true. There must be a written independent contractor agreement between the real estate company and licensee. If there's no written agreement, the licensee will be presumed to be an employee and the brokerage company will have liability for Social Security and Medicare payments and any penalties that might be incurred. So typically, when you hire on with a brokerage, you're an independent contractor. So, yeah. So you're not an employee, but you're an independent contractor. In Arizona's interpretation, generally, Arizona state law relies on federal law regarding withholding for independent contractors. The Arizona Department of Revenue withholding tax ruling WTR 93-3 states, for withholding tax purposes, the Department of Revenue will follow a determination of the Internal Revenue Service with respect to a worker's status as employee or independent contractor. So there's no workman's compensation or unemployment insurance, right? So if you get fired, you can't file for workman's comp. There isn't unemployment insurance. In addition, Arizona law does not require a brokerage firm to pay into the workman's compensation fund, nor into the unemployment insurance fund if the licensee is treated as an independent contractor. While this is advantageous for the brokerage, an independent contractor licensee will not be able to claim workman's compensation or unemployment insurance benefits if laid off or disabled. So if you get hurt showing a house or property, if you get hurt working, there's no unemployment insurance, there's no workman's compensation, So that's how it goes. In order for a broker's agent to be considered to be an independent contractor for IRS purposes, a written agreement is required. This is true, right? So when you hire on with the brokerage, you have to sign a bunch of documents saying you're going to be with that specific broker, and you're going to get paid through that broker, and that's the written agreement you'll have. So what's the big deal? So if licensees are independent contractors, why should the broker be concerned about creating policies and supervising them? Well, that's because Arizona considers real estate licensees to be employees for regulatory and civil liability purposes. So there's fines and more. So Arizona Department of Real Estate, ADRE, regulates licensees and may hold a brokerage firm and designated broker responsible for acts of their licensees. Violations of licensing statutes or commissioner's rules can result in disciplinary action, such as fines and license suspension or revocation. We look at civil liability. Arizona courts have also held their brokerage firm and or designated broker liable in civil actions against a company's agents. If you want to run a real estate company, better develop written policies that minimize risk. For regulatory and civil liability purposes, Arizona law considers licensees to be employees of the broker. This one is true. So, again, for regulatory and civil liability purposes, Arizona law considers licensees to be employees of the broker. So, you're an independent contractor, but you're still an employee of the broker. Is that unclear? It sounds confusing. In some real estate specializations, it may be unclear as to whether or not a licensee is or should be an independent contractor or an employee. Examples include property management, new home sales, and licensed real estate assistants. So the answer largely depends on how much control the broker has over the hour to hour work of the licensee and how and where it is performed and whose tools are used to perform the work. So here's an example. For example, a property manager who's required to maintain regular office hours and perform specific tasks using the company's equipment would probably be considered to be an employee. That's kind of easy. If you're a property manager, you're working for a broker, but your day-to-day activities as a property manager is monitored. So a property manager who has relatively free reign over where, when, and how to accomplish tasks would probably be an independent contractor. So two examples of a property manager: one's an employee, one's an independent contractor. As a realtor, you have free reign over your time. You're an independent contractor. Okay, for audits, none of this is a problem for the brokerage firm if the firm is not audited by IRS or the Arizona Department of Revenue. But who wants to risk it? Before deciding to treat someone as an independent contractor, it is best to consult with a tax professional. Here's a special case: unlicensed assistants. Since these assistants are not licensed, they cannot be considered to be independent contractors because of the licensing requirements under the IRS carve-out for independent contractors. Therefore, unlicensed assistants must be employees. So if you want to work as an unlicensed assistant, you're going to be classified according to the IRS as an employee, not independent contractor. Here's a controversial topic. Many unlicensed assistants are employed directly by the salesperson or associate broker. Companies who allow this may not have the control required by law or rule over those assistants. This can easily lead to unlicensed assistants performing services and being paid as if they were licensed. So in 2017, the ADRE issued an updated SPS on unlicensed assistants. So, okay, click here to read it. After you read it, there's going to be questions. You must answer about it. So, unlicensed assistants may be paid based on the number of transactions closed by their agent or team. This one is going to be false, right? If they're an independent, if they're an employee, unlicensed assistants, you got to pay them straight, like $10, $20 an hour, something of that nature. An unlicensed assistant may be employed by a licensed salesperson. This is true. Unlicensed assistant who has access to a property management trust account must be in the direct employment of the broker and an employee of the company. This is true. The best approach for salespersons or associate brokers hiring assistants is to establish a policy requiring assistants to be licensed. So we're going to go over Module 1 quiz. In order to renew their license, designated brokers are required to complete a total of how many hours of continuing education every 2 years? 30. Right, answer is 30 hours. So licensees need 24, brokers need 30. So 9, 12, 24, no. In Arizona, licensees of a brokerage firm are always considered to be employees for what purposes? Regulatory and liability. So licensees of a brokerage firm are always considered to be employees for regulatory and liability. So for workman's comp, no. Withdrawing unemployment insurance, no. Regulatory and withholding, close, but no. It's regulatory and liability. So if you're a licensee under a broker, you are still considered an employee of the broker. Which of the following persons must always be treated as an employee? Is an unlicensed assistant performing only clerical tasks. So clerical tasks. Those are unlicensed assistants. Those are always need to be treated as employees. So salesperson performing property management, no. New home salesperson, no. Associate broker who has delegated authority to review, no. An unlicensed assistant may perform all the following tasks except what? Except hold an open house with no licensee present, right? They cannot do that. Can they unlock a property for a licensed appraiser? Yes. So, say you're going to go show a house, and one of you can't go, but maybe one of your assistants can go. Can they go and unlock that house? Yes. Can they set appointments for licensee? Yes. Can they hold an open house with no licensee present? No. Can they deliver documents? Yes. But they cannot explain anything in those documents. In order for brokerage company licensees to be treated as an independent contractor under IRS regulations, the broker and licensee must enter into a written agreement. So, Bravo, the licensee must perform tasks in a timely manner under the direct supervision of the broker? No. The broker must withhold money from commissions for federal income taxes? No. The independent contractor may be licensed or unlicensed? No. So again, in order for a brokerage company's licensees to be treated as an independent contractor under IRS regulations, the broker and licensee must enter into a written agreement. So you should always have a written agreement with your broker that you're signing on, and you go in. If you're with a past broker, you sever your license with that broker and you sign some documents with your new broker. Let's go to Module 2. We're going to talk about independent contractor. independent contractor agreements, and the policy manual. Establishing good policies begin with the independent contractor agreement. ICA, independent contractor agreement. Even if you're a broker with no licensees or employees, understanding what goes into an ICA is useful. In her book, Arizona Real Estate, A Guide to the Profession, Michelle Lynn gives us a recipe for a good ICA. So, in Michelle Lynn's book, according to Michelle, general ICA requirements include the following: a statement confirming the licensee's independent contractor status, whether or not the company carries errors and emissions insurance, and how the licensee participates, expected expenses, and whether paid by the company or the licensee. So what are some expected expenses? How and when commissions are paid in the normal course of business, and upon the licensee's severance. So, when you guys sign on to a new broker, you need to read that policy manual. That policy manual is going to explain a whole lot of information. You know, how our commissions paid are very useful. I've worked for several brokers now, and my last broker was very confusing on how commissions got paid and what to do. According to Michelle, general ICA requirements include what records need to be kept by the licensee and turned in to the office, how disputes between licensees and the company or between licensees will be handled, statements relating to liability issues, and indemnification policies. So, in Michelle's book, Michelle suggests the requirements for the licensee should include the salesperson or associate broker will maintain their license in good standing. If applicable, maintain realtor and MLS membership. A statement that the licensee agrees to abide by all laws, commissioner's rules, and substantive policy statements. Acknowledgement that the licensee has read the company policy manual and agrees to abide by those policies. Michelle suggests the requirements for the licensee should also include an agreement to pay any amounts due to the company in a timely manner, a statement that the licensee will work diligently in the pursuit of business, agreement that the licensee will maintain adequate liability insurance. So here, agreement that the licensee will maintain adequate liability insurance on vehicles and insure them as business vehicles. So in my case, I have a couple. I have a business vehicle that we use for real estate. Michelle also lists responsibilities of the broker, including maintaining his or her license in good standing, compensating licensees in a timely fashion, providing office space or conference space for licensees. So some brokers will provide their realtors space and some won't, right? So currently, um, we don't have space for ours. It's just online. Finally, Michelle suggests including some or all of the following. So, what happens to transactions in progress? So, like listings, sales, leases, when a licensee leaves the company, which contract forms the company requires a licensee to use, what clerical services are available for the licensee, and at what charge. Are there any non-compete agreements? So, you got to check the up-to-date laws because those non-compete agreements are getting shut down nowadays. Anti-piracy provisions and confidentiality agreements to protect the company's intellectual property and private technology. An understanding as to the status of clients, listings, property management agreements, buyer broker and tenant broker agreements. So, in other words, are the sellers, buyers, landlords, and tenant clients of the brokerage, or may the licensee take the clients with them when changing companies? If you need to develop an ICA for your brokerage firm, I recommend that you read Michelle Lynn's book. Research different independent contractor agreements that are available in your market and meet your attorney to flesh out flesh out the fine points. A well-crafted ICA and policy manual will eliminate many of the dangers that face real estate companies today. A well-crafted independent contractor agreement need not require the designated broker to maintain their license in good standing. This is false, right? You need to always have your license in good standing. The policy manual. So, what about a policy manual? Is there one that's ready to use off the shelf? The short answer is no. But through the effort of a select committee of dedicated professionals, the ADRE created the ADRE Model Brokers Policy and Procedures Manual that we all can use to think through and establish policies specifically designed for our individual companies, right? So when you become a broker, you need to create a policy manual, and that policy manual is just good practice to have a policy manual, and you can use the template that the Arizona Department of Real Estate has, but you can't use it verbatim. You have to modify it. So not all companies are required to maintain a written policy manual. Commissioner's Rule R4-28-1103G state if an employing broker maintains one office and employs a designated broker, no more than one other licensed person, and no more than one unlicensed person, the employing broker and designated broker are not required to develop and maintain written policies, procedures, and systems. So right now, I'm under that, so I don't need a policy manual. But and most of you folks are going to be getting your broker's license, and you may need you may not need a policy manual right at this moment. But once you start growing, hiring other licensees, you're going to need a policy manual. So if you are a one-person brokerage, you don't have to have a written policy manual. But all brokers need an understanding of the things that can get them in trouble. So to accomplish this, we'll look at the ADRE's model policy manual and discuss some of the more important topics. So a broker who does not have any licensees or employees does not need to follow rule or statute. This is false, right? You still got to follow the rules and the statutes, even if you don't have any employees or licensees. Pages 6 and 7 of the Model Policy Manual lists what all brokerage firms are required to do. So in general, it states, and I'm paraphrasing, a designated broker must, 1, review and manage transactions requiring a salesperson's or broker's license and use of disclosure forms and contracts. So designated brokers have 10 days to initial and review all contracts. You got 10 days. 2, manage the filing, storing, and maintenance of transaction documents, handling trust funds, and use of unlicensed assistance by a salesperson or broker. So not only do you have to review initial all documents within 10 days, but you also have to manage a filing storing system. So if you have other salespeople, you need to give them access to the Google Classroom so that they can upload their sales log. And then also you need to archive it to make sure you have a backup of the backup. Broker requirements oversee delegation of authority to others to act on behalf of the broker. So if you cannot act within 24 hours, say you're on vacation, you need to delegate someone else. It could be a salesperson to act on the broker's behalf. Familiarize salespersons and associate brokers with the requirements of federal, state, and local laws. Review and inspect documents. Establish a system for monitoring compliance with statutes, rules, and policies. A designated broker is responsible for the acts of all associate brokers, salespersons, and other employees. So, again, a designated broker is responsible for the acts, right? So, say you have an associate broker out there and he's doing some actions, that DB is responsible. So, you got to have supervision. Salespeople, the designated broker is responsible, right? So, that DB should be reaching out to salespeople and talking to them, seeing what's going on. If an employing broker, right, the company, maintains one office and employs a designated broker, no more than one other licensed person, and no more than one unlicensed person, the employing broker and designated broker are not required to develop and maintain written policies, procedures, and systems as described herein. Licensed salespersons and associate brokers are also mentioned on page 7 of the MPM. Licensees are obligated to remain licensed, abide by all laws and rules, and abide by the broker's policies and procedures. A policy manual should require all licensees to maintain their license on active status. This is true, right? So, as a licensee or a broker, you need to always have your status on active. Brokers who are unable to act in a timely manner are also mentioned on page 7 of the MPM. If the DB or designated broker can't act within 24 hours, he or she may designate a licensee, the company employees, or another designated broker to act on his or her behalf. A salesperson may not hire or fire other licensees. So just because you set up, you're the designated broker, you're going on vacation, and you're not going to be able to answer a bunch of emails within 24 hours. So you set up the licensee, someone in your company, to act and answer those emails on your behalf. Well, that licensee cannot sever or start firing and hiring other people, right? They're not allowed to do that. That should be in your policy manual. Most of the things that they can and cannot do should be written in the policy manual. Each designation must be in writing and not exceed 30 days. Absent broker. In today's technological world, if a broker is able to perform all duties while absent for a few days, appointing another licensee is probably not necessary. However, if the designated broker is not able to or does not want to communicate with the office, a letter must be placed on file appointing a company licensee, or, in the case of a one-person company, another designated broker from another company to handle operations. So, if you're if you're good friends with another brokerage, you can appoint another brokerage from another company to handle the operations. But in today's technological world, you can handle emails over your phone. It's almost like text messages. Um, so there's an important note. The designation may not exceed 30 days. So this means that a broker may not have an ongoing file with no termination date, right? Reissuing such an authorization every 30 days is not permitted. So You're broke, you're the DB, you're the designated broker, and you're going to go on vacation, and you're not going to be able to answer emails within 24 hours. Well, you appoint someone else, right? That appointment cannot be longer than 30 days. And then you can't have a reoccurring say, oh, this person's going to handle it every 30 days. That's not permitted. If a broker is going on vacation for 3 weeks and will not be able to act, the law requires that a new designated broker be hired to replace the vacationing broker. Answer is false, right? So if a broker is going on vacation for 3 weeks and will not be able to act, the law requires that a new DB be hired to replace the vacationing broker. So they don't need to be hired. You just delegate. You just put it in the paperwork. Have them sign something in an email saying that they're willing to take on the role and act as a substitute while the designated broker is going to be on vacation, cannot act within 24 hours. When a broker will be temporarily absent and not able to act, any licensee in the company may be appointed to act on the broker's behalf for no more than 30 days. This is true. So, again, when you make that appointment, you appoint a licensee or another broker from another company. They cannot be appointed for more than 30 days. The designated broker has to do their job, you know, um, and can have a substitute, but it can't be longer than 30 days, and it can't be a reoccurring, every 30 days. The delegation of authority authorization form states designated brokers use this form to authorize duties to other licensees employed by the employing broker to act as a branch manager. Report a temporary, optionals report a temporary absence, or delegate authority to review an initial contracts or similar instruments pursuant to ARS 32-2127 subsection D and ARS 32-2151.01 subsection G and AAC R4-28-304B. All right, so let's go to Module 2 quiz. In an independent contractor agreement, a salesperson should be required to do all of the following except what? Except submit the licensee's personal budget to the broker management. So you don't have to do that. Keep the salesperson license in good standing. You need to, yes. Agree to abide by all statute and commissioner's rules, yes. Insure the licensee's vehicle for business purposes, yes. A designated broker who has no licensees or employees and is unable to act for more than 24 hours must what? They must appoint a designated broker from another company to perform tasks in his or her absence. So that's what they got to do. So A says appoint a new DB to run the company. No, you don't got to go out and hire and find someone and hire someone. No, you just appoint, right? You're just appointing that person. So it's sub work. They're just appointed. They're not really doing all kinds of things. Designate an unlicensed person to oversee transaction. No. Place his or her license on inactive status. No, definitely not. You always want your status on active. The ADRE model policy manual is a template that brokerage firms may follow. So ADRE MPM model policy manual put out a template that brokers can use, and we cannot use it verbatim. We have to change it up. Um, but yeah, so A says is designed to be ready to use for each broker without modification. No, you got to modify it. Um, Contains a sample independent contractor agreement. It does, but you can't use it, so it's still no. It doesn't contain a sample independent contractor agreement. Is useful for only for companies that have two or more licensees. No, it could be one, it could be none, it could be more than that. It's useful for all of them. A good independent contractor agreement should contain a what? A statement as to how and when commissions will be paid. So if you have your policy manual, it should tell you when and how you're going to get paid, right? That's what the policy manual is there for. Um, so B says provisions for the number of dependents the employee will list for withholding purposes. No. List of properties each licensee has sold. No. Clause whereby the broker holds the licensee harmless for any liability caused by licensee. No. Right. So a good independent contractor agreement (ICA) independent contractor agreement should contain a statement as to how and when commissions will be paid. 5. An exemption to the requirement that a brokerage firm maintain a written policy manual exists for what? For brokerage firms with no licensees or employees, right? And the exemption to the requirement that a brokerage firm maintain a written policy manual exists for brokerage firms with no licensee or employees. So A says all brokerage firms with more than one licensee? No. Brokerages who are out of town for more than 30 days? No. Companies with two or more employees? No. So this is an exemption. All right. Module 3, advertising agency and commission. For many of the policies, a company may implement begin on page 7 and are listed alphabetically. Let's begin with advertising. So in advertising, your policy manual should cover all advertising media, including the internet, websites, blogs, and social media. The broker should review advertising for fair housing and compliance and use of the fair housing logo. Review advertising for compliance with federal regulations, like the Truth in Lending Act and the RESPA. Set standards for social media and advertising. So, a salesperson or broker shall ensure that all advertising identifies in a clear and prominent manner the employing broker's legal name or the DBA doing business as name contained on the employing broker's license certificate. See R4-28-502 Commissioner's Rules, R4. So, what does clear prominent mean? This means that a consumer should be able to determine the name of the brokerage firm without having to search the ad or sign with using a fine tooth and comb or a magnifying glass. Many licensees, signs, and ads either do not contain the broker's name or relegate to a minuscule position. This is against commissioner's rules. So have your licensees make it prominent, just not dominant. Social media, all advertising, including but not limited to Facebook, LinkedIn, Instagram, and other forms of social media advertising must contain the name of the employing broker in advertising. You can't have any blind ads. So Rule 4-28-502 provides in part, a licensee shall not advertise property in a manner that implies that no salesperson or broker is taking part in the offer for sale, lease, or exchange. A real estate agent may place an ad that does not include the company's name and reads as if the property is being sold for sale by owner. This is false, right? So again, a real estate agency may place an ad that does not include the company's name. No, it has to include the company's name. Owner agent. So if you own a house, you must, if you, and you're going to sell it, and you're an agent, you have to put on owner agent. You have to disclose that. A licensee advertising the sales associate's own property shall disclose their license status and that they are the property owner by placing the word owner slash agent in the advertisement. So when you put owner agent, that tells the world in the MLS that you own the property and you're an agent because you have specialized knowledge in real estate. So you have to put owner slash agent. You can't just sell your property and not disclose you're a real estate agent. Accurate claims. A licensee shall ensure that all advertising contains accurate claims and representations and fully states factual material relating to the information advertised. A licensee shall not misrepresent the facts or create misleading impressions. So, called the truth in advertising. IDX, a licensee advertising a property that is listed by another broker must include the name of the listing company in the ad. The licensee advertising another broker's listing may be subject to local MLS rules or other entities' rules or guidelines. Placing signs. Before placing or erecting a sign on a property, a licensee shall secure the written consent of the property owner. So when you're about to sell a house and you want to put your for sale sign, it's up to the owner's discretion. They may not want to put a for sale sign. I've had one property owner, a couple that they said they wanted a sign, and some said they don't want a sign. Some said they want a sign, and they had a pool, so they have to add a little pool thing under that for sale sign as well. So it get the consent of the property owner in writing. The sign shall be promptly removed upon request of the property owner. When advertising a property that is listed by another company, the ad must identify the listing company. This is true. So here's a problem. The name of the company must appear in all advertising, but it often doesn't. So you want to type your thoughts in the space provided. You can do this offline. Again, must the company name appear on the web page? You can type your thoughts and do this offline. These are going to be what constitutes clear and prominent. You want to type your thoughts. You can do this offline. So AFB, affiliated business arrangements. On page 8 in the manual, our next topic is affiliated business arrangements. ABAs. So ABAs are affiliated business arrangements, ABAs. So under the Real Estate Settlement and Procedures Act, called RESPA, a brokerage company or any licensee is prohibited from receiving referral fees, kickbacks, or anything of value from a settlement service provider, SSP, settlement service provider. An affiliated business arrangement, right? ABA, affiliated business arrangement, or AFBA, you call it ABA, you call it AFBA, exists when a company or licensee has ownership of, an interest in, or arrangement with an SSP. ABA examples, right? A common ABA is when a real estate company or home builder also owns a mortgage company, title company, or etc. Another example would be when a licensee holds a financial interest in a home inspection company, a mortgage company, etc. Anytime an ABA exists, federal law requires disclosure of the relationship. A real estate company owns, here's an ABA issue. A real estate company owns or has an interest in a mortgage company, escrow company, title company, or other settlement service provider. The company wants its agents to refer business to the affiliated companies, right? So, say you're the owner and you have a real estate company and you own a mortgage company. Well, you would want them to talk to each other and refer business to each other. So, what disclosures must be made and when must they be made? So, you just have to disclose that you have affiliated businesses that work together. You have to disclose that information. If business is referred to an affiliated business entity, RESPA requires written disclosure to the consumer. So the disclosure must include 3 points. One, that the affiliated relationship exists. Two, the approximate cost of the service. Three, the fact that the consumer cannot be required to use the affiliated business. So the disclosure must be made at or prior to the referral. So here's a ABA question. A real estate company is affiliated with a mortgage company. The company's licensees usually send buyers to that mortgage company to get pre-qualified. When must the affiliated business relationship disclosure be made? So you can write up your thoughts offline. May a licensee pay a referral fee to or receive a referral fee from any settlement service provider? Again, you can type your thoughts offline. So, recommendation from the policy manual. So, you want to make sure that licensees disclose affiliated business relationships at or prior to making a referral to the affiliated company. If your company has these relationships, it should have a form containing the required disclosures for your licensee's use. Strictly prohibit the payment to or receipt of referral fees by your licensees from the settlement service providers. If an affiliated business arrangement exists, it need not be disclosed to the consumer until closing. This is false, right? So again, if an affiliated business arrangement exists, a ABA, it needs to be disclosed before closing, right at the beginning, actually. The next topic is agency. On page 8, the model policy manual states agency relationships. So this section should clearly describe the company's policy on agency. The following are examples of different forms of agency the company may implement. The company represents the seller, landlord, or seller or landlord exclusively when acting as the listing agent, but not the selling agent. The company represents the buyer or tenant exclusively when acting as the selling or leasing agent and not the listing agent. So let's talk about dual agency. The company represents both the seller or the landlord and buyer or the tenant as a dual agent. So there's limited representation. Disclosure form is required when there is only one sales associate or two sales associates from the company. A sales associate or broker may not accept compensation from or represent more than one party without prior written consent from all parties. The ADRE may sanction a licensee if the licensee has acted for more than one party in a transaction without the knowledge or consent of all parties to the transaction. Now, agency is established with broker, not the sales associate. So, in other words, the clients are clients of the company, not the licensee, even if the client is a relative or friend of the licensee. So basically, when you have a client, they're the clients of the broker. So again, agency is established with the broker, not the sales associate. So sales associate does work in the name of the broker, but when you get a client, those clients are the broker's clients. They're not the agent's clients. You work for the broker. You're an employee of the broker. You could be an independent contractor for the broker, but your clients are still the broker's clients at the end of the day. Cooperation and sub-agency. So will the company cooperate and co-broke with other companies that are not members of MLS or with whom there is no existing relationship? If so, how should the cooperation be documented? Will the company allow sub-agency? Sub-agency creates added liability for a brokerage firm, so it is rarely a good idea to allow it. Single agency. So most companies in Arizona practice single agency when they have one side of the transaction and disclose dual agency when the company represents both parties. So we have forms like AARs, Real Estate Agency Disclosure and Election. So that's called the READY. READY again stands for Real Estate Agency Disclosure and Election. Real estate agency, real estate agency disclosure and election. So call it the READY form. It's in AR and MLS. So this form has have become the standard of practice in Arizona. So many times, agency relationships are not discussed with or disclosed to the consumer until very late in the transaction or not at all. This is especially problematic when dual agency exists. So here's the solution to that: require sales associates to disclose agency relationships. This disclosure should be the following: it needs to be timely, meaning at first substantive discussion and not just prior to making an offer or at closing. Meaningful disclosure. So sometimes agents want to get their clients signed up before they're going to make an offer. So you want to disclose it before that occurs, and definitely before closing. It needs to be meaningful, so the disclosure should give the consumer options with an explanation by the licensee. Many times the options are not explained, and the consumer is asked to just sign the form. It needs to be in writing with written disclosure. The consumer and the company have evidence that the disclosure was made. So again, statutes of frauds come into play. Laws stating that contracts must be in writing to be enforceable. Here's an agency question: when it's a dual agency, are there any other disclosures that need to be made? So you could put your thoughts in and answer that asynchronously offline. Clearly describe the company's policy on agency and how and when disclosures are required to be made. Use AAR's ready form and consent to limited agency form or create similar forms for company use. Disclosure of how a licensee will represent a potential client should be done at the first substantive discussion with the consumer. So this is true. So again, disclosure of how a licensee will represent a potential client should be done at the first substantive discussion with the consumer. So when we say substantive, like you're actually having a conversation about buying or selling real estate. 1099s and antitrust. So on page 9, the next two areas covered in the MPM, the model policy, are annual 1099 report and antitrust compliance. So, annual 1099 report and tax compliance. This section should cover what IRS and AZDOR require, Department of Real Estate, who issues the 1099 form, the reporting issues for referral fees. So let's go over W-2. So some licensees directly hire unlicensed assistants. So, if you're a real estate agent and you need an unlicensed assistant, that's perfectly fine. If they are employees, as defined by IRS, then a W-2 must be issued and not a 1099. So, you're a realtor and you need documents to be delivered. Well, you can get an unlicensed assistant. Now they're your employee, and they need to be treated as employees, and they need to be given a W-2, not a 1099. They're not independent contractors. Unlicensed assistants are going to be handled as employees, right? So here's a question. Are you or your licensees aware of this and of the penalties that IRS has for not withholding and paying into Social Security and Medicare? So if you're not, you need to be aware that when you have an unlicensed assistant, you have to give them a W-2. They're an employee. They're not 1099. They're not an independent contractor. And you need to hold Social Security and Medicare. Antitrust. So this section should cover avoiding a discussion among licensees from competing firms regarding the commissions. So restraining competition through boycotting other listings, distributing listings exclusively to select and or closed groups of individuals. So the next item deals with everyone's favorite topic, uh, commissions, right? Go into money and you sue a house, you smells like $10,000 commission to me. The MPM is quite thorough in discussing commission issues, but there are only a few items we will discuss here. So, may escrow pay licensee? So, a DB may authorize escrow to pay commissions directly to a licensee. So, again, you have to have written authorization from the designated broker that the escrow company can pay commissions directly to a licensee. It's not traditional though. Traditionally, escrow company just pays the broker, and then the broker writes a check to the licensee. It must be done in writing on each individual transaction. So again, it's not the norm. Escrow company pays the broker. That's it. But if you wanted the escrow company you work with to pay directly the licensee, it would need to have permission from your designated broker, and it would need to be on an individual transaction every single time. The commission check should be delivered to the broker for review and distribution. Note, the broker is still responsible to deliver the 1099s. So at the end of the year, the real estate broker to every single realtor has to give them a 1099 for being an independent contractor. If a licensee is paid as a PC or PLLC, like professional corporation or professional limited liability corporation, the broker may pay the licensed professional corporation or licensed professional limited liability company. A broker may not pay a corporation or LLC of which the licensee is a shareholder or member. The distribution arises out of the fact that Within the context of real estate brokerage, a PC or PLLC may be made up of only licensed individuals who are licensed to the same broker. In that case, the brokerage may pay the PC or PLLC, who may then pay only licensed individuals within the PC or PLLC. What a broker may not do is pay a salesperson or associate brokers corporation or LLC. These entities could include non licensees who were not legally able to receive commissions. So if your licensee asks you to pay his or her corporation or the LLC, the answer must be no. A real estate broker may pay commissions to a salesperson's PLLC. This is true. Commission disputes may arise between licensees from different companies or between two licensees in the same company. Commissioner's rules prohibit dispute of any kind between licensees from jeopardizing a transaction. So, if two licensees are fighting about commissions, they must allow the transaction to move forward and close and resolve the dispute after closing. Policy decisions should be made regarding how disputes will be handled when different companies are at odds. Since commissions are paid to the company, these disputes should probably be resolved between the company's designated brokers. So, if you ever have a dispute, have your broker call the other broker and then you work it out there. Um, in the case of disputes between licensees in the same company, some brokers' policy manuals call for the creation of a committee of three disinterested licensees, while other brokers simply tell their agents to work it out. And if they can't, the broker will split the commission 50-50. Pursuant to ARS 32-2152B, the real estate commissioner is precluded from entertaining complaints regarding the earning, splitting, or non payment of compensation. Dispute, work it out. So the commissioner, when the public is at harm, that's when the commissioner gets involved. But when realtors disputing with other realtors, commissioner's not going to help you. You got to work it out. You got to take it up with your broker, and then your broker is going to tell you guys to work it out because you guys are professionals. To resolve commission disputes, keep it simple. The more complicated you make it, the more headaches you'll have. These sections are largely self-explanatory. The next slide contains a video about an out of MLS transaction. This section should cover the following: how outgoing referral fees should be paid, how incoming referral fees are handled, whether the company pays finder fees to unlicensed tenants of apartment complexes. See ARS 32-2176 for guidance. When licensees are negotiating referral fees between themselves and another company, three things should be kept in mind. 1. Have a written agreement. 2. Make sure the company you are paying the fee to is licensed. 3. Obtain the company's federal tax ID number and get a W-9 form signed. Referral fees or finder fees may not be paid to unlicensed individuals. So just because somebody refers you business or finds you some business, does that mean they're entitled to a finder fee because they need to be a licensed realtor, right? Except in one instance. ARS 32-2176 allows finder fees to be paid to unlicensed tenants in an apartment complex for referring new tenants to the owner or property manager. So, property manager is usually associate broker. If you live in an apartment and you have tenants and they refer you business, you can give them a for referral fee, but the fee has to be paid in terms of a rent credit. Can't be cash. Um, the law does not place a maximum on the amount of the fee, but it must be as a rent reduction or rent credit. No cash fees. So, you could, next month they don't have to pay rent, right? You give them a rent credit or you reduce their rent. Implemented property. This can create an excellent marketing program. All right. So note, prior to 2017, the maximum fee was $200 and could be paid no more than 5 times in 12-month period. Both requirements were changed in 2017. So if you allow deferred commissions, this section you should cover. So how any deferred commissions received will be paid to sales associates. If a beneficial interest can be assigned to a sales associate, and under what circumstances. So, how assigned commissions are handled with regard to the Internal Revenue Service, Form 1099s, etc. This section should cover how shared commissions will be handled, what type of agreement should be drawn, whether broker approval is required, what happens if a commission is shared without broker approval. Example, who will receive it, whether verbal agreements are allowed, that shared commissions and referral fees paid to someone outside the company are to be paid by the company, not by the sales associate. Your manual should include the following: sales associate compensation splits, schedules, and timing. So, do you have an 80-20 split? That's got to be in the manual. You have a 90-10 split, put it in the manual. What are your splits? How do you break them down? All that should be covered in your policy manual. Errors and omissions insurance deductions, compensation paid after termination, how bonuses are to be paid, minimum co-op fees, minimum acceptable commission, if money owed, company will be deducted. You have an out-of-state co-brokerage. This is a problem that affects commercial brokers much more commonly than residential brokers. Many national companies have brokers who represent them throughout the company, but just because someone is licensed in another state does not mean he or she may come into Arizona and act as the company's broker. So, you say you're a broker in Arizona, and there's another broker who was referring you residential brokers. So many national companies have brokers who represent them throughout the country. But just because someone is licensed in another state does not mean he or she may come into Arizona and act as the company's broker. So, more out of state co brokerage. If an out of state broker wants to represent a client in Arizona, the broker must have a written co brokerage agreement with an Arizona broker, and per ARS 32-2163, all negotiations in Arizona and with people owning property in Arizona must be conducted through the Arizona broker. The Arizona broker must assume all liability for the out-of-state licensee's actions. Refer to ARS 32-2163 for complete information on the issue. So you want to protect personal information, how information should be communicated, how to handle documents, no third-party access, how are the electronic files stored and protected, and document retention and destruction. So cybercrime and wire fraud. National Association of Realtors has produced a number of videos dealing with the dangers lurking in cyberspace. On the next slide is NAR's video, Window to the Law, Best Practices for Cyber Crime Prevention. So after the 5-minute video, you will be asked to answer a few questions. A real estate licensee should instruct clients what to do if the client receives an email or other instruction regarding wire transfers. This is true, right? So, a real estate licensee should instruct clients what to do if the client receives an email or other instruction regarding wire transfers. Computer passwords, such as your birthday or your dog's name, are very secure. This is false. To limit cybercrime, it is a good idea to purge your email regularly. The answer is true. So again, to limit cyber crime, it is a good idea to purge your email regularly. Pages 13 and 14 cover disclosure policy, but only a few documents issues are mentioned. These are discussed in detail in disclosure classes and will not be studied here. Caution, there are many more issues that must be disclosed that are not listed in the MPM, such as property in vicinity of an airport, environmental issues, fisher issues, and much more. Pages 15 to 17 discuss duties to clients and non-clients. These are discussed in details in required agency classes and will not be studied further in this course. Please review these pages on your own. Again, duties to clients and non-clients. Pages 18 and 21 contain very useful information, some of which we have talked about or will discuss later in the course. These include electronic signatures, employees, equipment, equal opportunity employer, fair housing, harassment, independent contractor, insurance. Time dictates that we cannot discuss them all in this course. I encourage you to review these pages on your own. All right, so let's go to Module 3 quiz. The consent to limited agency form should be used when a dual agency is about to occur. So, again, the consent to limited agency form should be used when a dual agency is about to occur. To limit, B says to limit the client's liability. No. At first substantive discussion with the buyer. No. Whenever two brokerages firms are involved in a cooperative sale. No. Advertising through social media websites must be supervised by the designated broker. So A says, is prohibited by the ADRE rule? No. Is never problematic in identifying the brokerage firm's name? No. Need not comply with fair housing or truth in lending guidelines? No. A finder fee may be paid to unlicensed tenants and apartment complexes as a rent credit with no maximum amount. So again, if you're a property manager at an apartment complex, you can give someone a finder fee. So it says no more than 5 times per year. No, as in cash, not to exceed $200. No, as a rent reduction, but not more than 5 times per year. No. Where should the brokerage company's name appear on websites? So it should be C, on every page at the top. So the brokerage company's name, our name is IMAV Realty. So IMAV Realty has to be at the top of every single page. If we have 10 web pages, it needs to be at the top. So usually it's the brokerage company's name with the designated broker name. So, and those are the two main things you need to know: the company name and the designated broker. So for A, so somewhere on every page, no. Only on the home page, no. It's not required on internet ads, no. Disclosure of agency relationships should be made at first substantive discussion with a buyer, seller, landlord, or tenant. So again, at first substantive discussion with a buyer, seller, landlord, or tenant. So that's when you need to have a disclosure of an agency relationship. So A says at the time the buyer is ready to make an offer. You want to do that before, so not that one. At the time tenant is signing a long-term lease, no. Simultaneously with closing, no. It needs to be before. So when you first talk to them, you need to disclose the agency relationship. All right, so let's go to module 4. Talk about licensee activities, teams, and assistants. One of the most important areas to address in a policy manual is areas of expertise. So, agents should not be permitted to engage in transactions for which they lack knowledge or experience. Again, agents should not be permitted to engage in transactions for which they lack knowledge or experience. A beginner licensee has virtually no experience, expertise. Same thing. Therefore, it is the designated broker's responsibility to make sure that a beginner is trained and that all licensees continue their training. In this section, we'll discuss licensee activities, which begin on page 21 of the MPM. Earnest money and property management will be discussed in the next module of this course. Uh, accepting Exempting these two topics in the uh, MPM section on licensee activities, including the following. Address changes, right? This section should include licensees must notify the department within 10 days of a change of residence or mailing address, telephone number, and email. So again, it's not just about if you moved, it's about if you changed your email, if you changed your telephone number, those types of things has to be, uh, you have to let the ADRE, Arizona Department of Real Estate, know. Otherwise, they will cancel your license. Now, it's not going to be expired. They will cancel it immediately once they learn about it. A broker must notify ADRE of any change or abandonment of a business location within 10 days. So, say you change office locations, you have 10 days to notify ADRE. Otherwise, they will cancel your license. So, 10 days to notify. Licensees must also notify the ADRE of judgments against them relating to real estate activity and any felony or misdemeanor conviction within 10 days of the event. This section should include company policy regarding alcohol in the workplace or company sponsored activities. Company sponsored activities, prohibition against illegal drug use, policy on use of medical marijuana, recreational marijuana. So, the service that a salesperson or broker provides to a client or a customer shall conform to the standards of practice and competence recognized in the professional community for the specific real estate discipline in which the salesperson or broker engages. A salesperson or broker shall not undertake to provide professional services concerning a type of property or service that is outside the salesperson's or broker's field of competence without engaging the assistance of a person who is competent to provide those services. Unless a salesperson or broker's lack of expertise is first disclosed to the client in writing, and the client subsequently employs a salesperson or broker. When a brokerage company is sued, the complaint often cites that the licensee did not meet the minimum standard of care. This is sometimes difficult to determine, but is really easy to prove when a residential agent is involved in a commercial transaction or vice versa. If a residential agent is involved in a commercial transaction, most of the times they're working outside their expertise. So that's how that works. It was clear he had no clue, yet he probably did the deal, right? So again, he had no clue, right? Residential agents working in commercial real estate, unless they have experience, they don't have a clue. Um, and he probably still did the deal. If the buyer was injured because of his lack of expertise, the broker's goose would be cooked. The liability might be lessened if the client was informed of the licensee's lack of expertise and had to agree in writing to allow the agent to proceed. So, if you have someone who wants to do transaction deals, the main thing you got to do is get your client to agree in writing and also disclose that you do not have a lot of experience or any experience in commercial real estate, and that they're okay with them working with you. If licensees want to pursue transactions outside of their expertise, what policies might be in place? All right, so you can submit that offline. Even when a licensee has experience in a field, the broker may want to limit the agent's ability within that field. For example, a residential agent with no experience handling short sales might not be permitted to list short sale properties, but be required to refer them to experienced agents. So if your broker allows you to list short sales, which would be written in that policy manual, then you're authorized to do that. But according to the policy manual, if you're supposed to give them to another agent, then that's what you're supposed to do. A broker must know what he or she knows and doesn't know, and what types of transactions carry the highest liability. So again, property management is going to carry one of the highest liability just because there's so many rules of engagement. So here's a case study. Your brokerage firm does not do property management. A salesperson has an investor who purchased some rental houses and wants the salesperson to manage them. The salesperson is afraid the investor will not buy more properties if the salesperson refuses to do the management. Of the following solutions, which are allowed under statute or rule? Select all that apply. Okay, so the answer is going to be C and E. So C, solution 3, agree to manage the properties, open a property management trust account, and have the salesperson collect rents and pay bills through the trust account. Solution 5 would be open a property management division and manage the properties with no involvement by the salesperson. So only solutions 3 and 5 allowed. So let's look at the other ones. Solution 1 says agree to have the company manage the properties with the salesperson collecting and depositing the rents in the company operating account. So no, that's not good. Allow the salesperson to manage the property directly with no company involvement. No, that's really bad. Solution 4, agree to manage the properties, open a property management trust account, and allow the owner to collect rents and pay bills through the trust account. So no, that'd be the worst. You can't allow the owner to do that. It has to be managed by a property manager. Property management usually has to have a broker's license. So you can't do property management without a broker's license. So we looked at it, only solutions 3 and 5 are allowed in the previous case study. Now, solution one's problem is that the rents can't go into the operating account. With solution two, the salesperson can't manage property without company involvement. The problem with solution four is that an owner is not allowed access to a broker's trust account. So we'll talk more about property management later in the course. On the topic of area of expertise and unauthorized activities, the NPM asks, what is the company's position on working outside of the area of expertise? So that's something you need to put in your policy manual. What does the company require as far as education for areas of expertise, i.e., CCIM for commercial? Does the company allow its licensees to be principals in separate LLCs as vendors on properties? If so, what are the disclosure requirements to the company and to consumers? What are the areas of practice that licensees are not authorized to participate in? So think about your company's mission and the areas where greatest liability exists. Put them on the list of unauthorized activities. Some of these might include property management, loan origination, right? Obviously, you need a mortgage license originator, MLO. You need a mortgage license originator license to do some loan origination. Short sales, business opportunities, land sales and land splits, wraparound financing. So when a licensee who specializes in residential sales is asked to list an office building, the licensee may take the listing without disclosing her or his lack of expertise to the seller. This is false, right? You cannot just take on any listing. If it's outside of your expertise, you need to disclose to your client or the principal if they're okay with it, and then have them sign it in writing, so that if it ever comes back on you, you have you disclosed it. So then you're limiting your liability. A licensee shall not allow a controversy with another licensee to jeopardize, delay, or interfere with the initiation, processing, or finalizing of a transaction on behalf of a client. So this is AAC Commissioner's Rule R4-20-1101, subsection D. Any action for collecting compensation may be filed with a court of law. The Department of Real Estate has no jurisdiction over compensation disputes between licensees. This section of the NPM should address disputes between or among sales associates and may include the following: any written agreement or policy concerning how the dispute is to be resolved, whether the matter will be mediated, and if so, by whom. If unable to mediate an acceptable resolution, who will determine the outcome? What happens if a licensee refuses to cooperate or fails to comply with policies? Must notice of the dispute be given to the broker? Include when and how the notice is to be provided. If a lawsuit is filed, who's responsible for judgments, damages, losses, costs, expenses, etc., incurred by the broker company in the defense of the lawsuit? What are the consequences for noncompliance with policies and agreements? Hiring. So a licensee is not effectively hired by a broker until the broker approves of the license transfer to the company via the ADRE website, or until the ADRE receives a completed and signed change form reflecting the hire and the applicable fee. So when you're ready to change companies, you'll sever your license with your current broker. and you'll just get you'll apply for on the ADRE website with your new broker, and then that new broker has to go into the ADRE website, accept you, and then you can get on board. So only the designated broker or an associate broker with delegated authority may hire or sever licensees. Again, say the DB is out on vacation, he or she cannot act for 24 hours. They have to appoint maybe a salesperson to act on their behalf. Well, that salesperson, can they sever, fire, and hire realtors? No. Only the designated broker has the authority to do that. Severing. So only the designated broker or associate broker with delegated authority may sever a licensee. A licensee may, on their own, sever from the company without broker approval. So again, a licensee may, on their own, sever from the company without broker approval. So you do not need to ask your broker as an independent contractor to stop working for them. You can sever at any time. You don't need their permission. That's one a lot of salespeople get hung up with. Um, yeah, it's kind of like the at work, at will state. You can quit at any time. So what do you do? So the DB require at time of severance only the designated broker can sever a license. This is false, right? Again, it says only the DB can sever a license. No, the licensee can sever the license, sever their not their license, but they can sever um, their association with that company at any time. This section should clearly establish whether the licensee or the broker company is responsible for various expenses, such as errors and omissions insurance, automobile insurance, office space and equipment, computers and software, phone, including long distance, 800 number service, postage, including FedEx and UPS, fax copier, etc. More licensee expenses, clerical, secretary support, advertising, liability insurance, FICA, taxes, health insurance, availability of health or life insurance or possible sources, license renewals. So again, when you're going to do your taxes, make sure you write off all these expenses because as a realtor, you have your business, which is real estate, and you have a lot of expenses. License renewals, so including what continuing education requirements are necessary renewal period. So recommended education, the licensee may not have others take continuing education for them. The lease includes what? Definition of property management, broker requirements to practice property management, how to handle and protect personal financial information of the parties, what documents are required for the broker's file, what disclosures should be made to tenants, what forms licensees should use, and trust account policies. Paperwork deadlines, additional documents required for listings, listing and MLS. So we have MLS, which stands for Multiple Listing Services, right? So who's responsible for dues associated with MLS, and when are they to be paid, right? Are other listing websites used? So here's a description of how offers and when are they to be presented, right? So procedures when a licensee is not available to present an offer, how multiple offers should be handled. So offers, right? So from day one in real estate school, students learn that all offers must be presented to a client, not just the one the agent think is the best, but all. So, day one in real estate, are you to present just one offer, your best one you think? No, all offers are required. Okay, even if they accept an offer, you know. Now, the only caveat is this: is that if your client in writing tells you, "Do not send me any other offers," you know, no one ever misses that question. The only exception to this occurs when a client instructs the agent in writing not to present certain offers, but that is rare. It's not that rare. So a lot of investors will send offers to your clients, and they're just annoying because they're all lowball offers. So, say your sellers wants 400K, right? And all these investors submitting offers for 300K, right? So your seller might say, I don't want to see any offers from investors that are below, 400. So that's what it is. How come then that sometimes the listing agent doesn't present an offer? So let's go over. Why is it a common complaint by buyer's agents that the listing agent did not present their buyer's offer? All right, so you can handle that offline. There are many other possible reasons why an offer gets no response. If a buyer's agent suspects an offer was not presented, the buyer's agent should remind the agent that Commissioner's Rule R4-28-802 requires all offers to be presented promptly. So, you know, for agents, Commissioner's Rule is kind of like law, and we are to, if you submit an offer and you didn't get a yes or no um, within your time frame, usually I put like a day or two, then maybe they didn't present it, right? So maybe you need to remind that agent there's a commissioner's rule out there, R4-28-802, that all offers must be presented, and you should get some feedback. So must a broker keep rejected offers, right? So you can handle it offline, but you have to keep reject offers for minimum 1 year, right? And accepted offers for 5 years minimum. So open houses include whether company opening house signs must be used, right? So again, this is at the discretion of the seller. So your seller might not want an open house sign. So it's up to what your client wants. I've had clients where they didn't want any open house sign, including me as an owner agent. I didn't want an open house sign. I don't want my neighbors to, see the open house sign. It's on the MLS. People who are aware or buying will see it on the MLS. Whether and under what circumstance licensees other than the listing agent can hold open houses, and any other policies regarding the operation of open houses, including safety procedures. An open house may be held by an unlicensed assistant. This is false. So this is kind of a caveat. It should say an open house may be held by an open assistant by themselves, right? If an unlicensed assistant is going to do it by themselves, that that is not allowed. But they can hold it with an agent. That's okay. This section may include policies on personal safety, building security, alarms, office closing procedures, work injuries, and hazardous conditions. So all pre-possession and post-possession agreements between sellers and buyers should be in writing. Licensees should recommend to their clients to seek appropriate counsel, including tax, legal, insurance, etc., concerning risks associated with pre-possession or post-possession. Um, is broker approval necessary, and what forms are required to be used? Is membership in various professional associations required or recommended? If so, which organizations? Who's responsible for dues, right? So realtors who sign need to join, their association. I'm with WeServe or WeMar, and you get the realtor designation, and they give you access to the MLS. If you don't get on with that association, you cannot get access to the MLS. If you do telemarketing, you must follow the do not call rules established by the Federal Trade Commission, FTC, right? Federal Trade Commission. So these rules are too extensive to discuss here, but you may research them at www.ftc.gov. So beware, the penalties for violating these rules can be up to $40,000 per violation. Right? So this is the do not call rules established by the Federal Trade Commission. The penalties for violating the do not call rules are not severe. This is false, right? We talked about this. It's about $40,000 per violation. Most licensees have never used seller financing because for years, new loans have been easy to get. However, there are some property types, mobile homes and small commercial properties, for example, where seller financing is common. In addition, there are certain restrictions placed on seller financing by federal law. The AAR has created three separate seller financing forms that try to cut through the confusion. You may access them through ZEP forms. Your policy manual as a broker should include the following: content requirements for all signs, any restrictions or policies about signs, such as sign authorization from the owner. Are signs provided by the company? Does company handle sign installation? Where signs are placed and removed? Is licensee qualified to assist clients with these and other programs? So VA, FHA, USDA, Section 8 housing, affordable housing, down payment assistance. These are all what we call special programs. This section should cover the time period required for the broker to review initial and date, their review of purchase contracts and similar documents, the policy of the company regarding the time frame for submission of all documents to the broker. This section should cover termination policy, right? Procedures when a licensee terminates association with the company or when the company terminates the sales associate, such as reviewing the licensee's pending business and determining who will handle the transactions, reviewing any agreements concerning compensation. So, again, you can sever your license with your broker, or the broker can sever their license with the licensee at any time for any reason. Disposition of company property upon the severance termination of a licensee from the company, such as keys, key card, documents, etc. Company policy or practice concerning release of listing agreements, information that the severance is not effective under the licensing laws until the ADRE receives the notice of severance, vacations out of town. What are sales associates expected to do when they leave town? or are on vacation. Um, must they designate another company sales associate to handle business? Who's required to be notified about the designation? Under what circumstance will the company designate a substitute? So teams like to think they are companies within a company. They are not. They are simply a group of licensees who have banded together but are all working for one broker. Because of the amount of business teams bring in, some teams are writing rough roughshod to dominate his small company. The team renegotiated the lease on the office space in the team's name and locked the broker out of his office. This is bizarre and right out of Ripley's Believe It or Not. So here's the team solution. The DB, designated broker, job is to make sure the company runs in strict compliance with all statutes, rules, and substantive policy statements. A designated broker who allows a team or company owner or stockholder to dictate policies that are not in regulatory compliance should resign as designated broker. So again, the DB is literally the final authority and is the overseer. That's the person who's going to hire and fire. That's what we call the designated broker. So may a team incorporate or be a limited liability company? So you can handle that offline. May a team have its own sign and not include the company name? Obviously not. So NPM, right? The policy manual. It goes over name approved. Teams are not companies. Broker has liability. Permissible and prohibited activities. Um, your manual should on team should cover compensation, team agreements, terms of dissolution. Does the company approve team agreements? A team may be a corporation or an LLC. This is false, right? So again, a team may not be a corporation or an LLC. A team is just a group of realtors trying to help each other out, trying to make some deals, right? They can't form a company. They can't be bigger than the broker. The broker, the designated broker, oversees all teams. In 2017, Arizona law changed to allow either a salesperson or a broker to hire unlicensed assistants. As mentioned in Module 1 of this course in 2017, the ADRE also issued a SPS 2017.01, which clarifies what an unlicensed assistant may or may not do. You can find it under the Resources tab. Assistants come in two categories: licensed and unlicensed. Licensed assistants can perform any service because they are licensed, right? So again, talk about opening an open house. An unlicensed assistant cannot host an open house unless a licensed realtor is there. It's the unlicensed assistant who may cause big problems for the broker or salesperson, right? So like unlicensed assistants, they can't explain any documents. They can have documents signed. They can deliver documents. They just can't explain any of the legal jargon in contracts. The next slide contains a video dealing with assistants. The assistant in the case was not licensed, but a licensed assistant would be in trouble too. So how may an unlicensed assistant be compensated? Handle that offline. IRS issues. So no matter who hires the unlicensed assistant, IRS reporting must be done, right? So unlicensed assistants, they got to be treated as employees. They're not independent contractors for tax purposes. Most likely, the unlicensed assistant should be treated as an employee. Right? Is withholding being done? So, if you have an unlicensed assistant, they need to be treated as employee. So you have to have withholding being done for tax purposes. You got to withhold medical um, and things like that. For independent contractors, you do not need to withhold anything. They will do that by themselves at the end of the year, their own taxes. They'll pay their own um, additional taxes from there. How about Social Security and Medicare payments? So let's go to Module 4 quiz. A team may be a what? Delta may be a group of licensees, all licensed to the same broker. So a group of licensees, a team may be a group of licensees, all licensed to the same broker. So can they be an LLC? No. Corporation? No. A group of salesperson licensed to two or more brokers? Definitely not. Real estate teams may be a separate, maybe separate entities such as an LLC. No. So the answer is Bravo. Are allowed to advertise in the team's name if the brokerage firm name is prominent. So in advertising, you still can't get away from the company's name has to be prominent, right? And and you need the designated broker's name there. So may not utilize the services unless persons know must have the name approved by the Arizona Corporation Commission. No. The broker must retain rejected offers for 1 year. Right? Answer C. So 1 month, no. 6 months, no. 10 days, no. So, brokers have 10 days to initial contracts. You have to hold on to accepted contracts for 5 years minimum. Rejected offers are 1 year minimum. Whenever a licensee changes his or her home address, the ADRE must be notified within 10 days, right? So, whenever a licensee, again, changes his or her home address, right, the ADRE needs to know where you live. Um, Now, if you change your branch office and you don't tell the ADRE, what can happen? They can cancel your license, cancel the broker's license. So, when you change your home address, when does the ADRE need to be notified? 30 days? No. 6 months? No. At the time of license renewal? No. If a licensee lacks the expertise to provide a client with the full service required in a transaction, the licensee must disclose the lack of expertise to the client and obtain the client's permission to proceed. Right? So you just need to disclose that you have a lack of expertise and the client is going to give you permission in writing to proceed. So refuse to take assignment? No. Refer the work to another licensee? No. Take the assignment regardless of the lack of expertise? No. These could be potentially good options. It's just the first thing you want to do is see if your client is willing to proceed without you having that lack of knowledge and learning. All right, so we're going to go to module 5, talk about earnest money, property management, and transaction management. Okay, according to page 22, the amount and type of earnest money deposit must be clearly identified in the offer to purchase and shall be made payable or wired to an Arizona escrow company or the broker's trust account. So, what is your policy regarding the removal of personal account numbers and personal information from copies of checks before they were forwarded to the listing agent. So the receipt for the earnest money deposit should be turned into the broker. All earnest money earnest money must be handled according to the contract terms and statutes. What is the company policy on retainer fees? Right? Policy manual should note that improper handling of monies is grounds for termination of the licensee. This could include failing to deposit earnest money in a timely manner, commingling or conversion, falsely representing that earnest money has been received or deposited. So today, many buyers don't carry a checkbook. So when you ask for an earnest money deposit, the buyer looks at you kind of funny. So um, when a buyer can't or does not want to write a check, one way to proceed is to specify that the earnest money will be deposited within some time, 48 or 72 hours after acceptance by all parties. I mean, again, you can always do a wire transfer. You go to the bank, ask for a wire to be transferred, and that's how you can handle monies with the escrow company, and that's how we usually handle that. Since this is becoming more common, it also takes place responsibility on both the listing agent and the buyer's agent to make sure the money is collected and deposited. If it was not collected as agreed and the transaction fell through for no valid reason, the seller might demand the earnest money and could hold her or his agent responsible. Identity theft continues to be a bigger problem. So, what are you doing to safeguard your clients against it? Does your agents make copies of earnest money checks and leave them for anyone to see? Do you allow your licensees to take cash, earnest money? If cash is offered, how should the agent proceed? Along with these situations, there's an earnest money question that should be considered when your agent has a buyer for a new home. So, the story of the student and the builder. So, most home builders use their own purchase contracts, which state that the earnest money will be deposited in the builder's operating account, not in a trust account or escrow. If the builder goes bankrupt, the buyer probably loses that earnest money. So, how can you protect your buyer? So, you can handle this offline. A licensee would not have a liability if a buyer's identity was stolen due to the licensee's mishandling of bank account information. So this answer is false, right? So again, the licensee should not have liability if a buyer's identity was stolen due to the licensee's mishandling of bank account information. So the licensee would have liability, right? So if they're mishandling your client's information, you're liable, right? Because you're supposed to take care of that information. Property management. So numerous property management issues have been on the ADRE's hot topic list for years, right? The biggest being trust account violations. So again, a lot of liability. The one of the biggest risks in real estate is property management. In recent years, ADRE audits found trust account violations in 22% of the audits. That is huge, right? That's astonishing. Um, in one case, over $1.8 million was missing, right? So we know you got to take out earnest money. You have to put earnest money in a trust account. It has to say trust account for your client. You have to clear out any interest that was earned with if it's greater than $3,000, and you have to clear out interest if it's in there for more than a year. Right, every annually you have to clear it out. In another, the broker was using the trust account as a personal checking account, buying groceries and paying personal bills. So, one, that's commingling, right? You're mixing your funds with someone else, and then it's conversion because you're converting someone else's money to your money. So that's two big violations: commingling and conversion, right? So you don't ever want to do that. Trust accounts are just that: money held in trust for clients. So again, what is a trust account? It's money held in trust for your clients, not for the broker, right? So ARS, Arizona Revised Statute 32-2174, deals with property management accounts and states. All property management accounts shall be designated as trust accounts and shall include descriptive wording substantially similar to one of the following in the trust account title. So you go to a bank, you open up a trust account for your property management clients. Should say trust account, should say fiduciary account, should say in trust for the individual or entity name. It should say trustee for individual or entity name. It should say fiduciary for individual name. Those are the types of descriptive accounts, bank accounts. You go to a bank and you open up a bank account, and that's how you name the bank account. So, trust accounts required. A broker's trust account is required for all of the owner's monies, except if the owner directs the broker to deposit the monies directly into the owner's account. The broker shall not have access to the owner's account. Trust accounts may be interest bearing, right? You got to clear out the interest if it's $3,000 or more. You have to clear it out annually, every year. The designated broker for a property management firm may authorize either a licensee or an unlicensed natural person in the direct employment of the broker to transfer monies or to be a signatory on the property management firm's trust accounts. If the person who is designated to sign on behalf of the designated property management broker is an unlicensed person, that person shall be a bona fide officer, member, principal, or employee of the property management firm. 3 days to deposit. So your client gives you the earnest money or the money for property management. You have 3 days to deposit the money within 3 banking days after receiving monies that are not subject to dispute or contingency. So you have to clear out the money every year. Cannot be more than $3,000 interest earned. You can earn interest on it. Um, and it has to be deposited within 3 banking days. The property management firm shall deposit the monies in either the owner's direct account or the property management firm's trust account for the benefit of the owner. Each rental agreement executed by a property manager shall include a provision that a broker must deposit rent in a trust account within 3 banking days of receipt. This is true. What's the benefit of a trust account? You can handle this offline. How do I open a trust account? You can handle it offline. Must all of a property owner's money be deposited in the trust account? Go ahead, handle it offline. Who may sign on property management trust accounts? Since there can be large sums of money at risk, what steps can a brokerage firm take to ensure that a person who has access to trust accounts is of good character? All right, we're going to go over evaluations. The evaluations mentioned on the previous slide could be required for all licensees and employees, but with the huge amount of money in some property management trust accounts, the stakes here are quite high. If problems did arise, the broker's due diligence prior to hiring could mitigate damages assessed against the broker. So you need to consult with a human resource expert when establishing hiring criteria to make sure that the criteria is non-discriminatory and evenly applied. What other steps can a broker take to prevent theft? All right, so in your policy manual on property management, licensees should have broker approval to do property management. Property management education is recommended. Policy should require use of standard forms. All files should be secured and kept confidential. All files are subject to company and ADRE audit at any time. Knowledge of and strict compliance with the Arizona Uniform Landlord and Tenant Act is required. Licensees should advise prospective tenants of the agency relationship to the owner landlord prior to showing property. A licensee should accompany all prospective tenants to properties, and under no circumstances should a prospective tenant be given keys or possession of a property without being approved and entered into a fully executed lease. A property manager should be well versed on the Arizona Landlord and Tenant Act. This is true. All money should be delivered to the broker's office immediately or within 24 hours. State law requires rents to be deposited within 3 business days of receipt. For any transaction in which the broker is a principal, rents or security deposits cannot be deposited in broker's trust accounts. Commingling of funds is prohibited. If a licensee owns rental property, rents from those properties must be deposited in the broker's trust accounts. This is false, right? The big thing here is if a licensee's own rental property, rents from those properties must not be deposited in the broker's trust account because the broker owns those trust accounts. That's where the problem occurs. Credit report policies adhere to the Federal Fair Credit Reporting Act. Licensees must have authorization to generate, review, or email a credit report. Licensees should be prohibited from generating a credit report on themselves or another person not applying to rent property under management. A rental application and credit report should be run on every applicant over the age of 18. No variations or exceptions due to federal fair housing laws. The credit report should never be given to anyone, including the applicant or owner. Property management agreement shall, pursuant to Arizona Revised Statutes 32-2173, a property management firm shall write property management agreements in clear, unambiguous language, and the property management agreement shall state all material terms and conditions of the property management firm's services, obligations, duties, and responsibilities to the property owner. Be signed by the property owner or his agent and the property management firm designated broker or the broker's authorized real estate licensee. Specify beginning and ending date, right? That's standard. You always want a beginning, ending date. Contain cancellation provisions that are agreeable to both parties. Property management agreement shall provide for the manner of disposition of all monies collected by the property management firm, including any tenant deposits. Specify the type and frequency of status reports to the owner. State the amount and purpose of monies the property management firm holds as an operating reserve for emergency and other purposes. Provide for the disposition and allocation of interest earned on trust account monies. State the terms and conditions of compensation the property owner pays for services pursuant to the property management agreement. Not be assigned to another licensee or licensed entity without the express written consent of the property owner. Contain an automatic renewal provision. If the property management firm sends the owner a reminder notice at least 30 days before the renewal date, the notice does not negate any other cancellation term otherwise agreed to. Provide for reasonable liquidated damages or cancellation fees for early termination of the agreement. Allow the property management firm's broker to authorize a licensed or unlicensed person in the direct employment of the broker pursuant to Section 32-2174, subsection C, to transfer monies from or to be a signatory on a property management trust account to which the property management firm deposits the owner's monies. Require more than one signature on checks written from a property management account. Contain any other provisions that are agreed to between the property management firm and the owner and that are not in conflict with the law. A property management agreement may contain an automatic renewal provision. This is true, right? So it may contain an automatic renewal provision. So it may renew like every 30 days, every automatic renews. Immediately on termination of property management agreement, the property management firm shall provide the owner with all originals or other copies of all rental agreements or related documents in the property management firm's possession for current and previous tenants. These documents shall include any applications, property inventories, leases, pet permits, default notices, lease amendments, or addenda in the property management firm's possession. The broker is not required to keep copies of residential lease agreements or related rental lease documents after termination of the property management agreement. Immediately on termination of a property management agreement, the property management firm shall provide the owner with all building plans, environmental studies, conditions, covenants and restrictions, inspection reports, contracts, keys, warranties, personal property or the documents in the possession of the property management firm. On termination of the property management agreement, the property management firm shall provide the owner with a final accounting of the property financial status that includes, at a minimum, within 5 days, a list of all tenant security obligations, within 35 days, reimbursement for all monies remaining in the property accounts maintained by the property management firm, except for monies needed for unpaid obligations incurred during the term of the property management agreement. Within 75 days, a final accounts receivable and payment payable list. Within 75 days, a final bank account reconciliation. All right, pursuant to ARS 32-2175, property management firms shall keep a residential rental agreement and related residential rental agreement documents for 1 year from the expiration of the rental agreement or until the rental agreement and related documents are given to the owner at the termination of any property management agreement. The records shall be kept at the broker's main office or at an off-site storage location in this state if the broker provides prior written notification of the street address of the off-site storage location to the department. Property management firms shall keep records of all finder fees that are paid to tenants for 3 years after the payment is made or until the records are given to the owner at the termination of the property management agreement. Records shall be kept at the broker's main office or at an off-site storage location in this state if the broker provides written notification of the street address of the off-site storage location to the department. Authority. The DB, designated broker, must review and initial all non-residential rental agreements. Residential lease agreements are not required to be reviewed and initialed. The broker shall keep written records of any delegation of authority to associate brokers to review and initial contracts. The property management firms shall consecutively number or file all signed property management agreements in compliance with a system that is orderly, easily accessible by the commissioner or the commissioner's representative, and consistent with generally accepted professional standards of the industry for that type of real estate. Property management firms shall maintain each non-residential real estate lease agreement and the transaction folder in which it is kept in a chronological log or other system manner that is easily accessible by the commissioner or the commissioner's representatives. For non-residential lease transactions, transaction folders shall contain confirmation that the deposits or other monies that were handled by or through the broker were handled according to instructions given by or agreed upon by the parties to the transaction. A complete copy of the non-residential lease or rental agreement, if applicable, a copy of the listing agreement. Property management firms shall number on-site residential rental transaction folders according to dwelling unit number or other systematic manner that is easily accessible by the commissioner or the commissioner's representative. A broker is not required to maintain duplicate residential rental transaction folders. On request by the commissioner or the commissioner's representatives for routine audit purposes, the broker shall make available within a reasonable amount of time all records relative to the property management accounts, including lease agreements, lease-related documents, and other trust records. From the time a listing, buyer brokerage agreement, lease, or purchase agreement signed, the broker must make sure the transaction is properly shepherded through closing. There are so many provisions, contingencies, and timeframes that a broker must keep a million to-do lists and either employ a full-time transaction coordinator or embrace one of the new transaction management software platforms. There is no question that the transactions of today and tomorrow will be virtually paperless. So if you haven't looked into a transaction management system, you should start. Contact your realtor association, the ADRE, or some of your fellow brokers and see what they recommend. Whatever system you choose, make sure it meets all ADRE record keeping requirements. Regarding transaction management, a broker should identify how licensees and employees should use the TM platform, transaction management TM. See SPS 2010.01 regarding transaction management guidelines. Designated brokers are required to review and initial all contracts except residential leases within 10 business days of contract acceptance. So again, this is a test question. Within how long do brokers have to review and initial contracts? 10 business days. This ensures that the broker is aware of the transactions that are happening in the company and allow the broker the opportunity to get errors corrected and make sure all disclosures have been made. One part of transaction management, TM, that seems to be overlooked by many brokers is buyer-broker agreements. In informal surveys, 20 to 25% of licensees say they use buyer-broker agreements regularly. Regarding both ARS 32-2151.02 and the statutes of frauds, ARS 44-101, an employment agreement is defined as an agreement authorizing or employing an agent or broker to purchase or sell real property or mines for compensation or a commission. That makes a buyer-broker agreement as much of an employment agreement as a listing agreement. Must a broker open a file for every buyer-broker agreement entered into by the broker's agents? If a salesperson who's working under a buyer-broker agreement leaves the company, does the buyer-broker agreement terminate? All right. So not only would Company A have a legitimate claim, the licensee has violated ARS 32-2151.02c by placing the buyer-client in possible double jeopardy for payment of two commissions. So this is a double jeopardy. When you have a client and they're signing two buyer-broker agreements, they're liable to pay two commissions. So what's the recommendation? One, open a company file on all buyer-broker agreements. They are not stepchildren. Treat them just like a listing. When hiring a licensee who has worked with another company, make sure the severing company terminates any outstanding buyer-broker agreements. This requires the buyer's consent as well. So this would be a real estate agency disclosure and election form. All right, so we're going to take Module 5 quiz. Number 1, what is the best way to protect a new home buyer from possible loss of earnest money? Suggest the earnest money be deposited in escrow. So what's the best way to protect a new home buyer from possible loss of earnest money? You want to suggest that the earnest money be deposited in escrow. Right? Escrow, neutral third party. So A says utilize the builder's contract as written, no. Tell the buyer not to give earnest money to builder, no. Suggest the buyer pay the earnest money in cash, no. A buyer brokerage agreement signed by a buyer and a licensee in a broker's employment of continues in effect after the licensee terminates employment. So it's Charlie. So A says terminates when a licensee leaves the broker's employment. No. Automatically transfers to the new employment broker when licensee changes companies. No. Becomes unenforceable by the broker if the licensee changes companies. No. So again, continues in effect after the licensee terminates employment. So a buyer brokerage agreement signed by a buyer and a licensee and a broker continues in effect after licensee terminates employment. So this is a commonly missed question because you have to terminate the buyer broker agreement be, before, I mean, after the licensee severs their relationship with their company, with the broker. A broker working in residential company management must deposit rent monies into a trust account within 3 days. Right? Again, broker working in residential company management must deposit rent monies into a trust account within 3 days. So 10 business days, no. 30 days, no. 5 days of lease expiration, no. If a broker is instructed to deposit rents in a property owner's account, bravo, the owner is the only person who may access the account. So the owner is the only person who may access the account. So if a broker is instructed to deposit rents in a property owner's account, the owner is the only person who may access the account. So this is going back to their property management trust accounts, one of the most widely violated systems. So A says the broker may not follow that instruction because it is prohibited by statute. No. Any licensee or employee of the broker may access the account. No. Only the broker and owner may legally have access to the account. No. Right. So what you want to do is, whoever is the owner, they're not allowed to have access to the account. Well, the owner is the only person who may access the account. So if a broker, they can put in the trust money, but they can't access the account. All the following could be used to screen potential property management employees, except bravo, inquiries about the person's gender. So A says work related skill tests. That's perfectly fine. A confirmation of the applicant's bookkeeping experience. Yeah, that's fine. Ability to obtain a fingerprint clearance card. That's fine. Inquiries about the person's gender. That is not fine, right? That's a big no-no. You can't do that in property management. You can't discriminate against gender. All right, so we're going to go on to the final exam. Are required to complete a total of how many hours of continuing education every 2 years? 30. So not 9, not 12, not 24. In order for a brokerage company's licensees to be treated as independent contractors under IRS regulations, Alpha, the broker and licensee must enter into a written agreement. So, again, in order for a brokerage company licensee to be treated as an independent contractor under IRS regulation, the broker licensee must enter into a written agreement. So, the broker must withhold money from commissions for federal income tax? No. The licensee must perform tasks in a timely manner under the direct supervision of the broker? No. The independent contractor may be licensed or unlicensed? No. In Arizona, licensees of a brokerage firm are always considered to be employees for what purposes? For regulatory and liability. So for workman's compensation liability, no. Withholding and unemployment insurance payments, nope. Regulatory withholding, no. Which of the following persons must always be treated as an employee? An unlicensed assistant performing only clerical tasks. So those folks need to be treated as employees, right? Unlicensed assistants. If they're licensed, they really need to be treated as independent contractors. So, salesperson performing property management duties, new home salesperson, no. An associate broker who has delegated authority to review initial contracts, no. Those are always treated as independent contractors. An unlicensed assistant may perform all the following tasks except hold an open house with no licensee present. So they cannot do that. Can they unlock a property for a licensed appraiser? Yeah. Can they set appointments for a licensee? Yes. Can they deliver documents? Yes. They cannot hold an open house with no licensee present. They need to have unlicensed assistants need to have a licensee present. A good independent contractor agreement should contain a statement as to how and when commissions will be paid. So, should they contain a provision for the number of dependents the employee will list for withholding purposes? No. List properties each licensee has sold? No. Clause whereby the broker holds a licensee harmless for any liability caused by the licensee? No. In an independent contractor agreement, a salesperson should be required to do all the following except what? Except C, submit the licensee's personal budget to the broker or manager. So A, keep the salesperson licensed in good standing, yes. Agree to abide by all statutes and commissioner's rule, yeah. Insure licensee's vehicle for business purpose, yes. Submit the licensee's personal budget to the broker's manager, no. In a good independent contractor agreement, the designated broker should agree to pay licensees in a timely manner. So acknowledge that he or she has read and understand the policy manual? No. Require licensees to work according to a set schedule? No. As an independent contractor, you can kind of set your own schedule. Compensate unlicensed assistants based on closed sales? No. All of the following are important items that should be contained in an independent contractor agreement, except what? Except the amount of time the licensee must devote to the real estate business. Right? So they don't have to do that. May listings be transferred when a licensee leaves the company? Yeah. All the following are important items that should be contained in an independent contractor agreement, except so how commissions will be paid after a licensee is severed? Yeah. Which contract forms licensees are required to use? Yes. AR, the ready forms. The amount of time licensee must devote to the real estate business? No. So number 9 is D. Independent contractor agreements should be revised or renewed annually as a good business practice. Right? So you should be revising your independent contractor agreements annually. So A, are required by the Internal Revenue Service in order to treat licensees as employees? No. Are standard forms created by the Arizona Department of Real Estate? No. Should contain a complete statement of every company policy? No. The ADRE Model Policy Manual is a template that brokerage firms may follow, right? So the policy manual, it's a template. You are not to use it verbatim, but you can use it as a template and you can modify it. So A says is designed to be ready to use for each broker without modification. No. Contain a sample independent contractor agreement. No. It's not even a sample, right? It's for it's for just viewing. Is useful only for companies that have two or more licensees. No. An exemption to the requirement that a brokerage firm maintain a written policy manual exists for brokerage firms with no licensees or employees, right? So an exemption to the requirement that a brokerage firm maintain a written policy manual exists for brokerage firms with no licensees or employees. So A says all brokerage firms with more than one licensee, no. Brokers who are out of town for no more than 30 days, no. Companies with two or more employees, no. A designated broker who has no licensees or employees and is unable to act for more than 24 hours must appoint a designated broker from another company to perform tasks in his or her absence. A says appoint a new designated broker to run the company, no. Designate an unlicensed person to oversee transactions, no. Place his or her license on inactive status, no. Where should the brokerage company's name appear on websites? On every page at the top, right? So A says somewhere on every page, no. Only on the home page, no. It is not required on the internet ads, no. Right? So you want it prominently on the top of every single page. Advertising through social media websites must be supervised by the designated broker. So is prohibited by ADRE rule? No. Is never problematic in identifying the brokerage firm's name? No. Need not comply with fair housing or truth in lending guidelines? No. So all social media websites must be supervised by the designated broker. So if you have a Facebook, this is a big one, your realtor is supposed to look at your Facebook profile, right? That's required. Advertising through social media websites, which everyone does through social media, must be supervised by the designated broker. So if your broker is not looking on your websites, so you need to be aware that your broker is going to be, maybe calling you about your social media, what you're posting. Disclosure of agency relationships should be made at first substantive discussion with a buyer, seller, landlord, or tenant. So at the time a buyer is ready to make an offer, no. At the time a tenant is signing a long-term lease, no. Simultaneously with closing, no. The consent to limited agency form should be used when a dual agency is about to occur. So this is when the consent to limited agency should be used when a dual agency is about to occur. B, to limit the client's liability, no. At first substantive discussion with the buyer, no. Whenever two brokerage firms are involved in a cooperative sale, no. Unlicensed assistants must be employed by the brokerage firm or a salesperson. So unlicensed citizens must be employed by the brokerage firm or salesperson. May be paid based on closed transactions? No. Cannot be part of a team? No. May not be paid directly by a salesperson? No. The designated broker's job is to make sure the company is in compliance with all statutes and rules. Right? That's the designated broker's job. Right? Their job is to make sure compliance is happening. Right? Make sure the company is in compliance with all statutes and rules. Right? That's my job. That's my job as a designated broker. I'm the DB. I have to make sure compliance is being followed. So follow instructions dictated by the company's owners? No. Allow teams to decide on policies best suited to the team's success and profit? No. Run interference between the ADRE and licensees? No. Real estate teams are allowed to advertise in the team's name if the brokerage firm name is prominent. So when it comes to teams, you can advertise in your team's name. So Team Red, right? But your company brokerage name still has to be prominent. So I'm at Realty, Team Red, right? You can't just have Team Red and then not have I'm at Realty, right? So A says maybe separate entities such as an LLC, no. May not utilize the services of unlicensed persons, no. Must have the name approved by the Arizona Corporation Commission, no. Under RESPA, an affiliate business relationship disclosure should be made at or prior to the referral to the affiliated entity. So prior to closing, no. Only when a dual agency might occur, no. Either verbally or in writing. So at or prior to the referral to the affiliated entity, this is when under RESPA an affiliate business relationship disclosure should be made. A real estate licensee may receive a referral fee from a out-of-state real estate agent. So mortgage company for referring buyer, no. Title company after referring 5 transactions, no. Home inspector, no. So a real estate company may pay an associate broker's PLLC, right? So if you're if you're a designated broker, I'm a designated broker. I hire another broker. They are an associate broker. I cannot pay if they have an LLC or a corporation. I can't pay their company. But if they have a PLLC, a professional limited liability company, I can pay that. So a salesperson's LLC, an associate brokers corporation, no. Commissions to licensed or unlicensed persons, no. If an out-of-state broker wants to represent a client in Arizona, the broker must do all the following except release the Arizona broker from all liability. Right, so release the Arizona broker from all liability. So if an out-of-state broker wants to represent a client in Arizona, the broker must do all the following except, right? This is except. So you do not release the Arizona broker from all liability. So if you have an out-of-state broker from California and they're representing a client in Arizona, and you have an agreement with your Californian associated broker, you're liable for that Arizona person, right? So Have a written co-brokerage agreement with an Arizona broker. Conduct all negotiations through Arizona law. Arizona through the Arizona broker. No. Be licensed in his or her state. No. Which of the following statements is not important when negotiating referral fees with a salesperson from another company? Is Delta obtain the salesperson's social security number? Right? That is not important when referring fees. Have a written agreement. Yes, that's important. Make sure the company you are paying the fee to is licensed. That's important. Obtain the company's federal tax ID number and get a W-9 form signed. That's important. Obtain the salesperson's social security number. That's not important. It's not even required. All right, we're at slide